Hey guys, John Oliver here. Hide that menu. John Oliver here to present the last portion of the 6 video series. This portion may be the most important. I mean, we're often coming at retirement in one of two ways. One, of an attitude and kind of a feeling of uncertainty and fear. And then often we have a group that's coming at it almost not as concerned, which is a good thing, but maybe a little overconfidence and kind of looking at the brighter side that everything is going to work out just fine and just perfectly. And often it's more of a combination of the two. It's a balance. So if you are in the balance position, I commend you because that is not normal. Please stick with me to the end of the video where we're going to talk about a couple tools that we want to share with you guys so that you guys can get some more done on your journey to retirement independence. As well as a couple other offers to allow you to at least get access to somebody to chat for a few minutes or to follow us along in different ways, social media, email, our website, for example. So again, let's talk about investor behavior. It really controls, so it controls the longevity, controls inflation, controls market volatility, because all those things are factors that we really can't control. The only thing we really can control is really um, our behavior and how we really react to it. And one reason why we do planning around all those areas is because if you know what you're doing and why you're doing it, you're going to be more comfortable and you're going to be convicted or have conviction in the reasons and why you're doing something. Conviction is different than confidence. Confidence is important. I want you to be confident, but at the same time, if you're overconfident, there's a problem. Conviction is knowing why you're doing something and how it works. You know how it works, why you're doing it, and what the results can be in variance. Okay. Overconfidence often looks at, unfortunately, looks at kind of the most rosy picture of the scenario, and that is not often the way in which things happen. So let's talk a little bit about the ways that we're affected. So if you look at yourself as kind of a little bit more fearful, a little bit more overconfidence, when we get to the first cognitive bias, it's the ostrich effect. And that's really kind of putting your head in the sand and not wanting to listen or learn about some of the things that really might affect you. So this, for example, this video series in itself is, it's not the most pleasant. I mean, to be honest, it talks about a lot of things that are really kind of going against us right now. And if we've got all these things going against us and we're going to use the ostrich effect, and this is not something necessarily we use, this is something that naturally happens, we're going to put our head down in the sand and we're not going to really listen to what's going on. And it's not that you have to listen to the news. I mean, we don't really watch the news here. I get my news sources and I get more reading than anything, and use some different like Twitter, for example, things of that nature. But you want to look at the numbers. So like, for example, when investing, look at the evidence-based investing. When talking about interest rates, look at what the interest rates are. Look at where the history was. I mean, we're looking at the facts about the situation. Now you can go read an article that says doomsday, and this, that, and the other, and it's actually it's working against our emotions rather than telling us what the facts are. So we need to work from the facts and not put our head down in the sand. We need to really we need to take this stuff head on. And that's really what you guys are doing now by watching this series. Confirmation bias is kind of the opposite. You often find yourself going into maybe a get-together, social get-together, or hanging out with certain people that they often all believe the same thing. So if you believe, so for example, if this politician gets in office, this is going to happen. You're going to find yourself kind of searching that same kind of title, looking for that bias. And we don't want to be just listening to those that agree with us. One of the things that I do very well, and what we do for our clients, for example, is really funnel I've narrowed down the funnel, but it's a wide variance. So I've gotten good thinkers, some deep thinkers that don't mess around, but there's such a variance to what they're saying that when it goes into my head, when I'm thinking about this stuff, it really helps me get a great perspective on everything, on one view and all the varying degrees of that view. And if you don't do that, then oftentimes your deep rooted beliefs, kind of the way you grew up, as well as, the kind of the major events in your life that actually happened, are going to control the way you think. And it's very difficult. I'm not saying that if you're doing this, that you're going to be able to just fix it on the dime. We're bringing these up because if we're not aware of these, then we are going to ultimately be controlled by them. The last one that we want to bring up is outcome bias. And so outcome bias is really the idea that when you have a good outcome, for example, that kind of goes your way, you have a preconceived notion that basically if you do this, then this good outcome is going to happen. And oftentimes we're not looking at, it's kind of like the iceberg effect. I don't know if you've seen the picture of the little iceberg hanging out of the water, but the big, large iceberg underneath the water, just the tip of it that people can see is poking out of the water. That is a lot like the outcome bias, is knowing that there were a lot of different events that happened prior to you getting your management position at the company. You might think it was because you had a good coffee talk, in January with your boss, and you signed up obviously to be interviewed to be the manager, and you kind of felt like, yeah, sure, I've been here a while, but I feel like, if I would have never talked to my boss that day in the kitchen with my coffee, you wouldn't get the job. And it's kind of like, no, it's all those things, all that preparation and all those different events that combine to become an outcome. And it's important for us to realize that, because oftentimes when we're working with clients, they kind of come in with a kind of a preconceived notion of some of the outcomes that happened in their life, and they have some bias around that, and they can't kind of let it go. When we might say, well, just want to let you know that, I know your stocks have done well, but please understand the S&P 500 has actually gone up 12% a year since 2008, or 2009. So it's the idea that there was a lot involved with your, well, I bought XYZ stock and it's up 100% over the last 10 years. And that's great, but what about XYZZ stock? It's up 200%. We have to understand that there was a lot of different factors involved with that general outcome. And it's important to really think about these biases. There's so many more. They actually affect the way that we make decisions. And again, if we're coming at this from kind of a fearful, more uncertain approach, or maybe an overconfidence approach, we often take different lanes in which we'll get to, the end result. And we know that everybody faces challenges. Every generation, for example, in this chart, talks about all the different major things that we thought were going to kind of change the world and change the way that we live, and it changes, the way that retirement's going to be affected, and it's all true. It's more about how you adjust to it. It's not ever going to be perfect, but one thing we can say is that over time, oftentimes, if we do have a clear head, or we use some sort of partner in our journey, and we have that unbiased, then we're going to be able to take advantage of what's actually happening around us. So, for example, the biggest impact on investment results. So you've seen there's all kinds of these different events, and our brains, it's hard for our brains to focus and not use these biases. So we say, COVID hit, and now this and this is never going to be the same, outcome bias, right? Our outcome, like, oh, look, USA didn't prepare enough because of this, and because of this, now we're stuck in here and everything. Like we're saying, like, look at but really, in all reality, we don't know if all the different things leading up to that might have made it different. We don't know. It might have been the same, and that's the whole deal. Is just understanding that there's more to the final solution than just what exactly happened. Which brings us to investment results. I mean, investment results over the last, this is over the last 20 years, 1998 to 2018. And I have a new one that if you want to request it from me, it has a 5, 10, 20, 30 year period of time. We'll put it on a Facebook post. The investor, because of investor behavior, average investor has done about 3.4%. While stocks has done 7.2% and government bonds have done 4.6. So you should have been maybe in that 5.5%, 6% range of actual overall return, but investors were actually more like 3.5%. That's big difference. That is really a big difference. And it's not that there's nothing really cognitive about this in the sense of your brain activity. I mean, most people can understand that, they could find a couple good businesses. They could stick with a couple good businesses, but oftentimes we're thrown off track for many different reasons. And again, we talked about those different biases. We also not taking action or being a little overconfident in taking too much action. So like over trading would be an example when we're talking about investments, or not buying when things dipped. We were just so afraid. We couldn't buy anything, and now our overall return, whereas the market is agnostic to that. It just goes up, down. It has no thinking, it has no emotions. And so oftentimes the average investors, I mean, if you look at it, it's a little bit more than double, about 1%, 1.5% more than inflation. That's not going to get it done. That's really not going to get it done, especially if you looked in the past of our other videos. We talked about interest rates being very low right now, stock market valuations being very, very high, and average investor, that 3.4 is probably looking pretty realistic now even, okay? Because we make one wrong move, we're only going to make 3.5, 4% out of our portfolio, not including inflation, taxes, okay? It's a very difficult environment. So to add behavior in there just makes it that much more insurmountable. We always say, I mean, just to be blunt and honest and, right up front with you guys, anyone that's watched this series has learned a lot. And bottom line, they know that there are all kinds of different ways in which to get help out there when it comes to the retirement journey of, getting yourself to a comfortable and, peace of mind type of retirement. It's not going to, the problem though, however, is if we don't get some help, if we don't hire that partner, or we don't use some sort of, team of some sort. So maybe your team is, you got a good husband and wife combination. You guys get some data and some information and some help from a particular service online. There's so many different ways. Of course, we know for about 75% of the population, I mean, they need a partner. They need an unbiased third-party partner to really save them a ton of anguish when it comes to just the time, the research, that kind of digging in. Maybe they don't feel like they want to research. It's not really what they specialize in. We always tell our clients, go to work and know that you have the peace of mind to be the best that you can be, to make the most amount of income that you can make. Go dominate at work and make some money while we focus over here. So if you're making technically more money at work and you're doing it with a greater peace of mind, then your overall lifestyle is better. Your health is better. Your conscience is better. You're feeling wonderful. And over here, we're working our butts off for you to make things happen and be that unbiased third party for you. And I like the quote Bezos said, and he said this, not too many years ago actually, but it's somewhat newer, but it is a couple years old. But he's talking about the future. He's talking about, leaning into the future. He's talking about, actually, he also used prior to this, he's talking about how we have to be nimble and we have to be agile enough to kind of navigate our way through what's going on. But we can't sit. If we sit and wait, and there's two reasons why we normally sit. One, we sit because we're just very uncertain and we're fearful. And the other reason why we always, see our clients that seem to, they kind of just want to stick with their routine. So it's not like they're sitting, but they're not really taking into account other things, is they're a little bit overconfident. And as Bezos would say, is if we're not leaning into the future, okay, then we're not going to be able to win, okay. And he says that if you're leaning away from the future is really what his quote is, but then the future is going to win every time. And I just think that's a wonderful way of thinking about it. It's leaning into the. It's also if you. He didn't say if you jump into the future or run into the future. See, you still got to take it a step at a time. You can't be overconfident, but you got to lean forward. You've got to get out of your seat, and you've got to make the moves that are going to try to tackle the different factors. Like, for example, what we talked about over this 6 video series, the different factors that are going to affect your retirement. So we, as a team, we specialize in working with pre-retirees and retirees. We have made a commitment as a firm. We actually only work with select families, which basically means we are a family office firm, which would entail the idea that we are making a commitment really to our clients that we're not going to get 1,000 clients. We know who we after years and years of being in this business, the team has decided to say, you know what, we know how we can best be of value to our clients. So let's make sure that we are going out there to really find the people we know we can help best. We always give everybody though their hour. We always give everybody their coffee, their one sit down. Okay, we don't disregard anybody. We think we can help everybody, but the way we help you might be different. We might find that our match is not quite perfect, and that we may not be a great partner for you, hand in hand, long term, or we might be a better partner for you in the future. But we're going to put you on the right track and get you rolling. And then for the rest of you that do see value in our service and we see value in our relationship, we are obviously doing our best to put our hand out there and be straightforward with them and saying we would like you to be one of our select families. Now we all work in different levels though. If you're like many of the clients that and prospects that we've met over the years, there's kind of 3 levels of the way in which you approach something. Again, I think each level will be, in fact, giving you the right to say that you're doing something. You're going to get off the chair and you're going to take a step in the right direction to take control of your retirement. One way is the easiest way, and I think everyone should at least do this, even if you want to move forward to other levels, is to go follow us on Facebook. Learn about us on social media a little bit. That's Facebook, the Agile Wealth Partners. You can use that link. Visit, it's going to be in the comments as well. Visit our website. Learn more about our process. Learn more about our team. Okay. There we're creating and curating, other information and making it useful for you guys. So if you want to kind of take that next step and you're just not quite sure you want to take the final step of, coming to see us, then go do that. At the least, go follow us. Go visit us on Agile Wealth Partners. You can sign up for our newsletters. You can sign up for our insights and commentary. It's all very useful. We don't we don't sit around and send you daily emails about why you should work with us. It's very proactive, very information based and educational based information that you will enjoy. Secondarily, we created 2 guides for everyone that was part of this 6-video series. It's a Social Security. It's kind of a Q&A format. It is updated for 2020. It's a Social Security strategy guide. Why is Social Security so important? Bottom line, it's probably going to be at least a quarter to a third to some people a half or more of their income, and it's guaranteed to a certain extent. Okay, we think generally the people we're talking to now, we're going to have generally guarantees in there, meaning it shouldn't go away. There might be some modifications. That's why it's important to make sure that you maximize it, and also to plan for the idea that maybe one day we do get a letter in the mail from the government. It says, we're going to reduce your benefits by 15%, which would be a total outrage for everybody, and I don't think they'll do that just for that reason. But generations down the road might have to deal with the smaller Social Security. We also have a retirement planning guide. This guide is so cool, guys. It is very, it's conversational. It's kind of intriguing. Kind of brings out some questions that you normally wouldn't think about when in regards to your nest egg, to your income. But it's not very numbers based. It's actually kind of taking some of the numbers, but saying, like, well, if this happened, what would you do? And you have to see it. So I'm excited to share it with you guys. Please request that. When you request that, all you really have to do is you go to our website. You can email us right here in the comment section. I'm going to have email. You can also reach out, go to our website, and it'll say in there you can request information. If you write in there the 6 factors, I will send you those 2 guides. So if you go to the website and you see the pop-up that says, do you want insights? Put in your, I think it's just your name, your email, and at the bottom it says request information, and put in the note 6 factors. If you do that, then we'll take care of that for you. I would love to get those 2 guides out to you guys. Third and final, at the end of the day, we have found the best way to actually get up off the couch per se, right? Get up off of your comfort, your current track, your current journey that you're on, and making sure that you're planning for everything that could happen is to schedule a call with us, guys. It's a 20, 30-minute call. We've got the calendar right there. You just click on the calendar. You look for a time that fits you. You select it, put a little bit of information in there, and you will then be told that you've got a secured call with us that's complimentary, that's private, and you got 20 to 30 minutes with probably with myself or Nick, one-on-one, or maybe possibly both of us. But bottom line is you get that call, you're gonna get a lot out of it, and we are too. I mean, I think it's a great way to see if we can provide value to you, and it's a great way for us to see if you're a good fit. If we can't help you in the most efficient and most convicted way possible, meaning we just don't think that we're actually a good fit, we will tell you. I mean, we can only work with so many families. I mean, we're not at our limit now, but before we know it, we will be. And when we are, we're going to be done taking on new families. So at this point, we're accepting new families, and we're excited to help more families out. And we're building our team. Our team is expanding, so I'm very excited. Now, if you do that call, one of the things that we'll talk about is the tax analysis. So not necessarily on the call, but what we're going to say on the call is we're going to offer you the ability to kind of take it to a next level, another conversation. And it doesn't even have to be tax analysis. It's just very powerful. Our personalized tax analysis. It can be done on the first call. More than likely, we have to come up with a second call or an in-person appointment. From there, we will create a personalized tax analysis for you, which basically all that means is it's going to show you how much forced income you are going to be expecting to have and what your taxable situation is going to look like. And then we'll name 2 or 3 things that we know that you could do to lower your taxes as you get into pre-retirement, so 5 to 10 years before, or as you actually retire. So if you're considering retiring, or if you're 1 or 2 or 3 years into retirement or more, I mean, technically speaking, you can gain a lot from that personalized tax analysis. So just want to thank everybody for requesting and listening to our 6 video series. Please reach out.